Hello, welcome back friends to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. In today's video, we'll look back over the last few days and recap what's been going on in the market. We'll look at the Bitcoin price chart, we'll look at the derivatives market, we'll check out on-chain spending. We haven't been thrown any curveballs in the last few days, but it's still good to check the lay of the land as we come into the beginning of a new week. If you enjoy this content, make sure to give my video a thumbs up and subscribe to my channel. We're growing fast, almost to 4,000 subscribers, which is absolutely amazing. I appreciate each and every one of you for the support you've given me. Now let's talk about Bitcoin. Looking at the price chart here, in our last video on November 11th, we were right around here. We had just seen this big sell-off, this big Darth Maul candle from 69,000 back down to 65. And we've spent the last few days curling and building some support here in this range. I find these little pullbacks to be pretty strong. We're not seeing a ton of selling. The bears have not been able to push the price down very far, and we've been ranging sideways. Not dissimilar to this pullback from the original all-time high break in October on a smaller timescale. We did get a weekly candle close yesterday. Another weekly candle closed above 60,000 here. Very bullish and above the previous all-time high break. Whenever I see folks freaking out about price on Twitter, I always encourage them to zoom out, and the weekly chart is a great place to start for that. Something kind of interesting to observe here. This is the 1 hour chart, and this rally right here is what we got into the weekly close yesterday. It's always kind of funny how those things will happen. In the last few hours before a big candle closes, a lot of times the market finds a way to step in and push price exactly where it needs to go. And we got some of that yesterday here on this rally. This morning, we're coming back down and we're testing 65 once again. My suspicion is that we will get a bounce here and the rally will continue, but it may take a day or two for that to play out. So let's check out the on-chain and derivative spaces and see what's been going on in this whole area here since we spoke the other day. We'll kick things off looking at network activity. Got a bunch of charts up here, and these are all various looks at active addresses and active entities on chain. If you recall, an entity is a cluster of addresses that we group together using some of our native algorithms and methods at Glassnode to identify individuals on chain. And we like to see the growth of entities into strength, into market strength, because it shows more participants showing up each day to transact in Bitcoin. The level of active entities reached its zenith here in the beginning of the year and fell off pretty hard as the market kind of curled and rolled over earlier this year, and we hit a baseline in the summer. But we can see we've had a nice steady growth of active entities in the last few months. We aren't really rocket shipping into orbit, but it's a nice, consistent, steady growth of participants on chain each day. Over here, we've got active addresses. The addresses are used by these entities. You know, an entity could be one or many addresses. And likewise, we're seeing the same kind of steady growth. Like to see that, like to see this healthy growth. We're back up into kind of early bull market levels here. So great, I'm happy to see that. Another chart I've been watching here, this blue line is the number of addresses with a non-zero balance. So this is an address that has any amount of Bitcoin greater than zero. You can see this value is growing rapidly through most of last year and really topped out in late April, actually, after we reached the market peak, interestingly enough, a few days after that. And since then, it kind of went sideways, and we've been growing again, and we're now almost back to all-time highs in number of addresses with a non-zero balance. This helps to corroborate this growth we're seeing here in active entities and active addresses. Here is our spent volume age bands. We've looked at this a bunch of times on the channel, but I don't think we've looked at it in depth anytime recently. This is the spending volume every day on chain, broken up by the age of the coins when they were moved. Right now, it's filtered to only show coins that are at least 1 month old at the time of being spent. Earlier this year, we had a lot of elevated volume out of this cohort. As older coins were being spent into these rallies, people were looking to realize some profits. And then it kind of subsided for most of the year till we got to September, and we had this really empty, quiet period on chain here in late July and through September. But we did see, as we got the bounce at the end of September, I'm going to zoom in, as we got this bounce at the end of September that really started the rally into October, where we've gotten most of our gains in the last couple of months, we started to see more old coins being spent. So we were seeing these values grow. We were seeing increased older coin spending into the rally. And once we reached this new peak here in the end of October, October 20th, the spending from old hands has been decreasing since then as price has gone sideways. This is healthy market behavior. This is healthy distribution of older coins. We like to see things shuffling around. It allows people who are looking to take profit to do so, and it allows new market entrants who are waiting for a good buy to find that opportunity. We don't want the market to just run away from everyone necessarily, because that opens the door for a lot of selling and it doesn't give people a quality entry. But as long as we keep doing these little rally and then sideways, rally and then sideways, we see increases in spending and then it subsides as the market absorbs that supply. Another rally, another increase of spending, and then it subsides as the market absorbs that supply. I love to see price going sideways after spending. Price is holding up amidst new supply and demand is stepping in. That's the takeaway from seeing this kind of dynamic where spending of older coins is declining but price is staying strong. We'll keep an eye on this over the next few weeks. I mean, we'll always keep an eye on it. But right now, the dynamic is very healthy. This is a bull market dynamic. We get a bit more spending, the market absorbs it. There's a few days, maybe a couple of weeks of reset, and then we move on. Here is our net profit and loss chart and some of the related spending charts we've been looking at. Something that I noticed on the net realized profit and loss chart is that we had the highest print of profit taking that we've had all year just the other day. Now that alone is not a cause for concern. And in fact, I find it encouraging because of the aforementioned strength in price. Huge profit realization print, price holding up and sideways. If we zoom back out, you can see that this green print is higher than any of the other prints earlier this year, which would make sense. We have higher prices than we've had at any point earlier in the year. We also see on this chart here, this is realized profit. This is one of the pieces of what produces this net P&L line here. This big chart is the outcome of all realized profit minus all realized loss. In the last few weeks, realized loss has been very muted, which makes sense. We're creating new highs and the majority of the network is in profit. The times when we get these loss realizations are when we create a new high, someone buys it, and then we pull back. In the last few days, we're not getting much loss realization, but we are seeing a steady increase in profit realization while price is holding up. You zoom out of realized profit, you can see we're not quite at the levels that we were at earlier this year in terms of total raw realized profit on chain. Remember this one over here, the reason this was the highest print we've ever seen, this is net realized profit and loss. So this is the net outcome of both of these charts here. But this one, just pure realized profit, has not yet reached a high print for the year. It's getting there though, seeing realized profit growing steadily while price is growing, and even in recent days getting some spikes while price stays sideways, shows that we have coins being realized, profit being realized, but capital is stepping in to buy them. Every seller has a buyer, and if the market is holding up while record profits are being realized for the last 6 months, that's a sign of underlying market strength. So generally speaking, we're seeing more profit taking, less loss realization, and the market is absorbing that supply with healthy demand. Down here on our SOPR metric, which is the spent profit ratio of all coins, we can see it continuing to healthily bounce off of the cost basis whenever it is tested. And this shows just a continued willingness to spend coins in profit and an unwillingness by the market at large to realize coins in a loss. As long as we continue to see this line get bounced off of, we can anticipate bullish behavior in price. It's when SOPR gets broken down below the cost basis, as we saw here in the summer, that's when price is really showing weakness. And we're nowhere near this right now. This is steady, healthy bull market behavior with controlled spending. A quick check-in with our long-term holders. They did start distributing slightly as we reached the mid-October highs, but they've kind of gone sideways, and this group isn't really selling with any kind of quickness. We've seen short-term holder supply. The other group that makes up our sets of holders has increased their supply. They've gained a few of the coins being sold over here by these long-term holders. But generally, this group is not relinquishing their coins. They're just kind of holding steady. We aren't seeing mass distribution yet. which makes sense. This is a savvy, sophisticated group of investors, and they can recognize that the market is sideways. There is some price strength, but we're not in a parabolic rally. So they're waiting. They're waiting patiently, and I suspect they will continue to wait. This group is well versed in how Bitcoin's market cycles play out, and I don't expect any emotional behavior from them. But we will see selling at some point. This line will start rolling over more aggressively. It's just a matter of when and how the market holds up to that new supply. But as we've pointed out previously, their cost basis, their current standing level of profit, which is this blue line, is at a much healthier level than it was earlier this year at similar prices, when it was 2 and 3 times higher than where it is now. So while there's been a small amount of spending out of this group, most long-term holders are not at the level of profit that we would consider peak, where we would think they are highly likely to start dispensing coins at a large rate. They're right on the cusp. They're right there. And I think if this market were to get a little bit more of a nudge upwards, we might start seeing more distribution. So we'll keep an eye on this. Here is our derivatives dashboard, where we keep track of futures and options. If you're a regular viewer on this channel, you have seen this futures dashboard a lot. The other day when we were talking, we had just seen a bit of a futures flush. We had had high funding, a bit of price weakness, and we had seen a deleveraging event where we had some liquidations, some long liquidations, and price went sideways. And the great thing about the last couple of days is that the funding rate has stayed pretty neutral. You can see there's been a little up and down, but mostly this funding rate has stayed at the 0.01% neutral positive level, which is very healthy. We need these kind of deleveraging events every now and then, because whenever we get price growing and funding spikes up with it, we almost always get some kind of deleveraging. Here it was in September, deleveraging. Here it is as we broke the all-time high in October, quick rise in funding, a lot of leverage in the futures market in new open positions from long traders. They go giga long at the all-time high. There's a bit of weakness, they get flushed, and we keep seeing these spikes. And this one right here was just the other day, which doesn't look too dissimilar from earlier in November. Big spike, rising funding for several days, a bit of a jump up to new highs, sucker some people in, some price weakness, and then flushes, hard flushes, big liquidations. This shows over $30 million in liquidations in this one moment. And that's not counting all the people who just had their positions closed out normally, who didn't get liquidated but were just wrong. So while we've gotten this reset in the funding rate, open interest has stayed sideways and remained high, which I expect will just be the way it is from now on. And this could be what reality is for Bitcoin. We move up, we have a strong rally, funding elevates, we pull in a bunch of long apes in the futures market, and then we need to flush them out, reset, take a week or two, and then rally again. It can get frustrating for retail to watch these kind of dynamics, but when we're paying attention to the on-chain data, we can see these things happening. We understand that these price fluctuations are the result of these various mechanisms that we monitor, the funding rate, on-chain spending. We're charting these things in real time, so we will retain an edge here, while other folks make emotional decisions based purely on price outcomes. This looks very healthy. I do expect funding will rise again as price rallies out of this sideways consolidation that we're in right now, and we'll get another dynamic like this at a higher price. So, total overall assessment. Right now, futures market looks quiet. Funding is pretty neutral, open interest remains elevated, and the amount of margin being used in futures contracts is mostly cash and cash equivalents. You can see the amount of crypto margin reducing over time and continuing to reduce, which means that the quality of margin, the quality of the leverage here, is a higher quality than it was earlier this year during the spring rally, when we had 60 and 70% of the margin being collateralized with crypto, which just compounds volatility on volatility. So we've got a healthy futures market, low amount of crypto margin. That's good. We have long-term holders who have distributed some coins, but still remain patient and reticent to move much of their stack here. We're waiting to see this group roll over, but I anticipate they will hold out for higher prices. We're seeing some profit taking, increased amount of realized profit each day, but the market is absorbing it. Price is staying sideways, which shows that there is a demand to absorb that new supply, and the spending behavior generally remains healthy and positive. We did have an increase of older coin spending when we broke the all-time high at the end of October, but it has been decreasing now for several weeks and is back down to what I would call a healthy baseline. And all this spending, similar to this profit taking here, was absorbed by the market, and we've continued to rally. We are seeing more active entities each day, more active addresses, and the number of addresses that have a non-zero balance that have acquired some amount of Bitcoin is almost back to all-time highs. We are in the middle of a bull market. We may continue to see short-term price weakness because those things are governed by forces beyond the on-chain metrics. But macro picture, big picture, everything still looks great. Controlled spending, record accumulation by hodlers, the futures market continuing to do its thing, and price hanging out above the previous all-time high. That's what we're seeing in the market today. I want to keep this assessment on the more brief side, but it was important for me to get out an update to you so you know what's been going on the last few days. We will continue to test our bull thesis every day with new data. And as soon as things start looking weak, if we feel that the market is going to turn over, we will talk about it together. Make sure you follow me on Twitter at TXMCTrades. I post a lot of analysis and you can interact with me on there as I stay pretty active. Make sure you leave any questions for me down below in the comments, and I will read them as I always do. We'll check back in maybe around Thursday or Friday and see what's been going on this week. We may have some new things to discuss by then. Hope you're enjoying the November weather, and we'll chat again in just a couple of days. Take care of yourselves, friends. Cheers.